Uber rides are getting a major revamp in California this year with the state's new gig worker law officially in effect. The ride-hailing app will now show prices differently and allow customers to select preferred drivers. The changes are meant to give drivers more power over their rides and avoid consequences of the new law, Assembly Bill 5. Guys, I mean, people have been watching this play out very closely in the way that Uber and some of these other ride-hailing apps have been trying to shirk the changes around this because we're talking about contractors getting paid like full-time employees. This is it's an interesting move by Uber.
And some of the legislators in California actually said, wait a minute, Uber, this actually doesn't mean that you get to avoid essentially what we've written into law by making some of these small cosmetic changes. It almost seems a little bit sneaky. Let's make these changes and, let's make it a little bit more difficult for riders to get some of their rides. Let's make it a little bit more difficult for drivers so then everyone will be very, up in arms. The Uber machine is working incredibly hard along with Lyft, DoorDash, and others essentially to fight against this regulation because they've said that they can't exist in this space unless they only classify their workers as contractors. But I think as we start to see across the country this shift in how we classify employees, it almost might be better for them to just get on board and figure out a way to do this.
Yeah, Barbara, I'm curious to know if let's just say Travis Kalanick walked into Shark Tank's doors, right, years ago, pitched this idea, pre-IPO, before anyone was looking at this as a public company, and just said, hey, here's the idea, we're not making a profit. Would you have been into this idea?
You want the truth?
Yeah,
or what I should say? The truth is I would have missed the whole thing.
Really?
And I would have laughed at whoever the investor was who invested in it. But now I take it seriously because it's clearly a win and beyond whatever everyone envisioned. But let me weigh in on this ruling.
Sure.
I think it's a clear win for the drivers themselves. They're not employees, but they have some rights now. They have the right, and this is a right that's against the consumer that they're not talking about. They have the right to refuse your ride, which you might say, well, that's fair. If they don't want to go across town in an hour, that's their right to refuse the ride now. But they can also refuse to go into the wrong neighborhood. That's a problem, and I think that's going to loom large in the future. I think the company is going to have to deal with that one. With regard to how much it really affects the consumer, when I really analyzed the numbers, I thought it affected the rates about 3%, because now the only difference is they have to give you a range of what your fee is going to be versus nailing it on the head. That's good for the driver, bad for the consumer. But I'm going to say one last thing, which is I constantly am in L.A., going between LAX and where I live in L.A. And what happens is when I go to that airport, I go to the Uber area, and there are hundreds of people waiting.
Yeah, that one's a mess.
You go to the taxi stand, no one wants a taxi because taxis in LA are still, even with these changes, twice as expensive.
See, but that's the thing.
So Uber's fine.
It seems like they're fine, but they haven't traded above their IPO price since they came out, right? It's still down below it, so there's still investors watching this are saying, when is this company going to make money? Because you could say they're fine, their lines could be long, but when are they going to make money?
Who knows? I don't know that kind of stuff. All I know is my rate's hardly going up, and that's all I care about.
Yeah, all right. So looking at it from the consumer angle, that's probably the best way to look at it.
No, it's
as long
not,
as they're there.
But that's the way I look at it.
But do you think that a company like Uber, like Lyft, but we always think about those two companies, they're not the only ones in this gig economy.
I think they are, though.
Right. You think they're the only ones. Do you think that a company like that, they say they can't really survive, right, if they classify some of these, workers as employees? Do you say that that's BS?
I think the estimates are $500 million a year from what I've read. That's what's going to be the increase if they have to do payroll taxes, unemployment insurance, benefits, all that stuff. $500 million a year. That's a lot of money, but they're used to losing money. The fact of the matter is they're a phenomenal play in a needed space, providing great needed services on both sides, to the consumer and to the driver. So I don't see how they won't win. Of course, I can't address the more sophisticated topics like they're not making money. Is that a good investment? I don't know about that. But I do know they're here to stay, and they're going to grow every single year. Eventually, I got to believe they're going to make money.
And they've also been, they even themselves have kind of been realizing that they can leverage their platform to go into all these other businesses. We've talked about Uber Freight time and time again. We've talked about Uber Eats. There's so many other ancillary businesses now tied to what was just a taxi competitor. But we'll see what they can do as Uber, again, trades below its IPO price, continues to trade below. Hey, investors, Zack Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.